Well, hello, everyone, and welcome to this month's edition of Westmark Trading's Market Masters webinar series. My name is Raleigh White, and I will be your moderator today for what I know is going to be a fun and educational experience for all of us. And to this point, I'm pleased to share that we have three engaging market masters with us here today, including Dave Aquino, Bennett McDowell, and Doug Campbell. Now, each of these fine gentlemen have prepared a unique presentation that is designed to leave us with at least a couple of fresh new ideas that we might be able to use in our trading and investing activities right away. That's our goal. But before we get started, there are a few housekeeping items I need to cover with you. First of all of today's presentations are being recorded, and everyone that registered for today's webinar will receive a link to these recordings in the next day or so. Our presenters are going to also, with regard to our presenters, they're going to address any questions that you might have either during pauses in their presentation or at the end of their presentation. So please type your questions in the question panel whenever you would like to. I will be monitoring these questions and I'll feed them to the presenters when they're ready for questions. But don't worry, we'll make sure that your questions are addressed. And lastly, you may want to put your webinar display in full screen mode for the best viewing experience. And with that, let's get right to the reason that we're all here. Now, our first presenter today is Dave Aquino, and he's going to be talking about the ultimate income trading system. Now, Dave is a professional trader and a partner at BaseCamp Trading and has over 20 plus years of real-world experience teaching and trading options for income. In today's presentation, he's going to be sharing several things, including how to create a framework for consistent, high-probability income trading, how to use a set it and forget it strategy that almost manages itself, and an easy to understand trade setup that you can use 52 weeks a year. And with that, please join me in welcoming Dave Aquino to our webinar.
Thanks a lot, Raleigh. I really appreciate the opportunity to be here with you all today. And if you give me just one moment, I'll get my screen up in front of everybody so that you all can see it. Double check. Okay. Well, again, thank you very much for inviting me to be here today. I really enjoy this kind of format where we can teach and interact with traders that have various interests. My specialty is trading options, and the system that I'm going to talk about today, we call it the income options for maximum results. We have a specific name for our program. It's called 11-hour options, and we'll get into those particular details. But I just want to emphasize one thing that has been evolving over the past 6 months to a year, and it's become very evident that the easy gains of the bull markets of the past several years, it's starting to come to an end. After the election of President Trump and the passage of the new tax law, we've had a pretty good run. Now, with some changes in Congress, some changes in the tax law, some slowing down of economic results, it's going to be up to the individual trader, I believe, to be able to perform for themselves. You can't necessarily rely on the strength of the market to make up for some of our shortcomings. So what I'm presenting to you today is an opportunity to learn how to trade options to produce a consistent winning income stream. So this is what I'm really excited. It's something we do in our trading rooms all the time. Really quick risk disclaimer. I'm not going to read this to you verbatim, but we just want you to know that trading is risky, and we're providing this information for the sole purpose of education and helping you make your own investment decisions. Okay? Rule CFTC 4.41, basically the U.S. government wants you to know that what you do in the markets is risky, and please don't trade with money you cannot afford to lose. All right. So Raleigh gave you a really nice introduction of what I do. Again, my name is Dave Aquino. I've been with BaseCamp Trading for over 6 years. I graduated from Vanderbilt University about, in 1990. And from there, I became a broker with Merrill Lynch at the ripe old age of 23. And then I worked for the Vanguard Group for a number of years, over 12 years, in their asset management division, working in the ultra client group. Me and a couple of other portfolio managers managed over $660 million of client assets. I was the derivatives portfolio manager. Basically, my job would be to take the highly appreciated stock that these families had accumulated over time, great grandpa's Ford stock or something like that. And they never wanted to sell it. The basis was too low. So we would use options to develop an income stream. So you can see I've been doing this a long time. And again, like I said, I've been over with BaseCampTrading.com for over 6 years, and I have real world experience as a trading instructor, mentor, and coach. So the first question I want to address, because this comes up a lot, what separates profitable traders from the 90% of traders that lose on a consistent basis, unfortunately? A profitable trader does three things. They seek to maximize their profits per trade. They know what is a realistic goal per trade based on risk and reward. Then they have confidence in their approach. A lot of times when I have traders that come to me right at the beginning, they're not quite sure what their approach is. They try a little bit of this, a little bit of that, and they're not really good at everything. They kind of try to be a jack of all trades. But in the markets, that doesn't work, because what that leads to is not being able to do one thing very well. And that leads to the inconsistency of gains. Okay, maybe they'll have a trade where they'll make 100%, and they'll be feeling really good about themselves. And then they whittle it away over the next 3, 4, 5 trades with losses to come back to actually be worse off than they were at the beginning. Okay, a profitable trader does very consistent things. They know how much they can make per trade, and they balance their risk reward. They pursue the same approach, the same trades, or even just single type of trade, and they do it again and again. And because they gain confidence and experience, they have consistent returns in their gains. And that's what creates profitable trading. Okay. So you might say, well, that sounds pretty easy, Dave, but you know what? This stuff is pretty hard. Trading is hard. What makes trading so difficult? Well, first of all, and we've kind of experienced this in the past couple of months, it's the markets. Okay. In a bull market, it's pretty easy. You just kind of throw a dart, whatever stock it lands on, you're going to make money, because with a rising market, it raises all stocks or all boats. So yeah, you may have made some money, but it wasn't necessarily your stock picking prowess. It was more so the bull market that you're in. The bear market, well, this scares the pants off of most people, because they'll be in a position and then it'll sell off. And then they sit there and they're frozen. They don't know what to do, and it sells off some more. And some traders even, they'll double down and they'll buy some more. And then when they finally sell, the market rips higher, and then they kick themselves for selling too soon. And then I mean, those are the two main ones. But the third one is the sideways market, and that's the kind of market we've had periodic episodes over the past 3 or 4 months, specifically November, December, when you've had this sideways market chopping up and down. For the past couple of weeks, we've been in a little bit of a sideways market, and that is particularly difficult because most of you have been taught to trade with the trend, right? The trend is your friend. Well, when you can't identify a trend, you're taking positions that almost always turn against you. So those are particularly tough. So that's one reason why trading is difficult. The second is timing. Say you get the market right, but maybe you're trying to swing trade when the market is really choppy. Or maybe you're trying to intraday trade reversals in a trending market on an hourly or a daily time frame. You have to match how you're trading with a time frame that's suitable for that type of market. And again, most trading, if you really look at it, if you're trading breakouts or reversals, you can adjust into different time frames that are more suitable for your style of trading. All right, and the third thing is trade execution. If I sat you down today and I said, okay, the markets are going to go up for the next week and a half, what type of trades are you going to do? Can you tell me the exact type of trade? You can trade a breakout trade, what time frame, how are you going to determine your target, things like that. Okay. Describe your entry technique. Describe how you manage the trade. How do you take your profits or how do you set your stop losses? Okay. Most traders kind of wing it. They just do it by the seat of their pants. What feels right, because a lot of times I'll ask a trader, why did you get into that trade? And they'll say, I thought it looked like it was going to move higher. Okay. So they're trading based on what they hope it's going to do versus what it's going to do. And these are things you should know ahead of time before you execute a trade. Now, if you put all those three things together, that's what make up a trade. And for you to get one or two of those things right is pretty tough. To get all three things right at the same time, consistently, time and time and time again, it's pretty difficult. Okay, so that's why 90% of traders have difficulty with consistently making money. So this is why I submit to you, you need an income trading system. Now, a lot of you say, what does an income trading system mean, Dave? It means an approach to the market that you can apply, a type of trade you can do consistently time and time and time again, day after day, week after week, that can generate a consistent return. You're probably not going to hit a home run every single time you take a trade in an income trading system, but you make a little bit of progress, a little bit of gain, a little bit of growth in your account. And you just repeat that system time again in a very systematic way. That's what I mean by an income trading system. And the reason why I especially now submit you need this type of a way of trading is because we're going to be facing some headwinds, folks. If you are anywhere keeping up with the news, from the Q4 earnings have been pretty good, but almost every company out there has been decreasing their forecasted returns or growth or revenue for 2019. Okay, we're looking. I mean, Ray Dalio the other day, he's been talking about we're in the seventh, eighth inning of a 9-inning ball game in terms of this bull market. We're going to be facing some headwinds. You're hearing terms like earnings recession coming up because this is where the companies are projecting their growth is going to be. When that happens, the markets start to fall. So we have to make money in that kind of environment. Well, remember, I used to work at Vanguard Group, and I used to know the chief investment officer personally, Greg Davis. He was actually in the institutional side, and we would do some work. But he came out yesterday, and basically Vanguard, which is the largest mutual fund company in the world, manages $5.3 trillion. It dramatically cut its expected rate of return for the stock market. The Vanguard's known for their S&P 500 index fund. They created it. So they're very attuned to expectations as it pertains to the market overall. Okay. Now, basically, what Greg said was, if we look forward for the next 10 years, our expectation of the U.S. equity markets is for about a 5% median annualized return. That means some years it'll be a couple of points higher, and some years it might be a couple of points lower. But that's the median return. 5 years ago, this number, this expected rate of return, would be close to 8%. You see how much they cut that? And Vanguard is a very conservative institution. So it is very profound that they would actually do that. Because, and what this actually means is when you look at your overall core asset allocation of your investments, you're looking at that equity portion and you're saying, well, that thing should make 8, 9, 10, 12% per year. Well, you're going to have to readjust your percentages because now Vanguard's saying, you know what, we've experienced an outsized performance on equities. Now you have to cut that back. You're only going to be getting 5%. Okay. If we think of that as an individual investor trying to extrapolate where our retirement funds will be in 5, 10, 15 years, you have to account for that. So basically what this means is now you are responsible for the growth in your account. You can't depend on the market. Okay? That's very profound. I was actually shocked when I saw Greg said that. I almost texted him and said, what's going on? That they usually, look folks, Vanguard doesn't usually come out and say stuff like that. They just don't. And I said, like, whoa. That they must have serious reservations on how people should be looking at their future growth. Okay, so let's keep it going because I have some good news. I know that's kind of like the downer news. This is the better news. Okay, where are you going to go to get your growth? Okay. All right, so let's talk about why you need an income trading system. Okay, what can it do for you? A lifetime income trading system serves as a foundation to all your trading. It can provide a baseline level of monthly income. This actually relieves the pressure on you to perform every month and hit home run trades. A very good example of this is if you're in retirement and you're trying to generate $2,000 a month, and you know, okay, that works $500 a week. Now, the first week, you don't really make much progress and you come out flat. Well, what happens? Now I have to compress that, and I have to produce $2,000 in the remaining part of the month. In the second week, well, you have a bad string of trades, and now you're behind $500. Now you're kind of behind on your trading. I still need $2,000, plus I have to make up that $500 I lost. I have to generate 2,500 in the next 2 weeks in order to hit my number. So you're getting more and more pressure. And what happens? You take bigger size trades, you try to use more leverage, all those kind of things. If you have an income trading system, you have a consistently repeatable, high probability, and dependable profit way of trading. Okay, this is fundamentally different from how we go into the markets on a regular basis. It's almost a difference between kind of a hunter-gatherer versus an agrarian society. Okay, we are consistently harvesting our monthly income. All right. The one thing too is you need an income trading system that works in many markets, both trending markets, bullish markets, markets that may be dropping or pulling back because we may be getting that in the next 6 to 10 months. Okay. And then you also need markets that are good in sideways markets. Okay. I mean, good ways to trade in sideways markets. Okay. You must be able to depend on this trading system in a reliable way to make money. Okay. You must also have an idea of how much you can generate. Every time you get into a trade, you know, based on risk reward, this is something that I can expect. Okay. And technically, it should also be the smallest risk, therefore, the highest probability trades because you depend on this money. And it should be your highest confidence trading system. You shouldn't be afraid to implement this. You should actually do it quite well because your ability to sustain yourself depends on it. Okay? All right. So the key to doing this is basically don't reinvent the wheel. If someone has a way of doing this, follow that. All right, follow a proven step-by-step trading method and master that thing that really works. I go back to say, I teach this income trading system a lot, and we do a lot of advanced courses on it. I find a lot of traders want to embellish it. They want to add on, make it a little bit better. The key to this is, and you'll see it here at the end, it is not difficult to master. It has to be simplistic enough to work in many environments, but robust enough to handle volatility. So you don't have to do and expand it. You just have to consistently do very well these fundamentals. I mean, I'm a student of John Wooden, and John Wooden, the basketball coach for UCLA. Okay, anybody know what his first practice would always do? What was the very first thing he teaches them? First day, first practice of the year. He teaches them how to put on their socks and how to properly tie their shoes. Okay, you think about that. This is what, 9-time winning coach, the national basketball championships. The first thing he does with his most talented basketball players in the country, teaches them how to put on their socks and tie their shoes. He doesn't embellish the fundamentals. He wants them to master what works. All right. What's nice is the markets that we trade have weekly option expirations, and in some cases have intra-week expirations. That gives you the chance to profit from the strategy many times a week. We average 3 to 5 trades in our trading system every week, and the goal we have is a 90% win rate. Okay? So again, what you're looking for in a step-by-step income trading system is something that is robust, straightforward, easy to understand and follow. The nice thing is when you have these 4 characteristics and you repeat them 3 to 5 times a week, week after week, year after year, you're going to be very, very good at it. Okay? All right. Our income trading system is called 11-hour options. And 11-hour options, again, is a proven, consistently profitable way of trading options. It is a credit spread trading strategy. Excuse me. And again, we implement it several times a week. We've been trading 11-hour options over almost 4.5 years now. And in that time, we've experienced many different environments, not only bullish bull markets, bear markets, sideways markets, but we've gone through elections, we've gone through scandals, we've gone through oil shocks, we've gone through, gold falling through the floor, commodities kind of contracting. We've traded in expanding international markets and now contracting markets. And we've traded all calendar seasons, the spring, the fall, the winter, and the summer. Okay, we've taken over 756 trades. Now, I haven't updated this slide probably since October, November of last year. So this number is actually well over 800 trades now. And our win rate is 92.9%. Okay, on average, the return per trade is a little over 5.1%. Okay. Again, the goal originally when I developed the strategy was 90% plus. Again, we're running about 92.9%. We actually have an overnight trading focus. We keep our strategy pretty short term because of a lot of market volatility and the time frames that we trade this on. So we put the trade on one day before, and we allow it to close at expiration. These trades based on the 60-minute chart. I know a lot of you do an daily chart. We trade these trades on the 60-minute chart, and it's very important that we do it on that time frame. We evaluate the quality of the trade and its parameters based on price momentum and therefore direction, and understanding where various support and resistance levels are positioned to help us increase the probability of success of our trades. Okay, the trading goal is to generate income through overnight theta decay. Basically, we're selling something with a value at the time that we sell it, with the hope that it expires for at zero. So we sell something, but then becomes worthless. Therefore, we keep the maximum gain. And again, we run close to over 5.1% per trade. Okay. Why is selling credit spreads different? Because it requires you to look at charts from a different point of view. We want to basically sell our credit spreads, the short strikes, away from projected price direction. We want to think about where will price most likely not be at expiration. Okay. And let me, one example I like, let me visualize this, Dave. Let's play a game of hide and seek. And here's the seeker. He's your big brother. Okay, he's your big brother. You're going to play in the backyard. And in the backyard, this is big tree. Okay, so he runs in the backyard, and there you are. There's me. And you see your brother. You're hiding behind the tree. He doesn't see you, but he remembers your favorite hiding places in the front of the yard. So you see him, and he takes off to the front of the house. You're smiling because you see where he's going. Clearly, he's heading higher. Well, what you're going to do is behind the tree, go the opposite direction. Okay? By the time he figures out you're not in the front yard, time has expired and you win. It's the exact same thing with credit spread selling. Now, let me show you what it actually looks like on this hourly chart. This is the SPX, the S&P 500. So we watch price action, and you can see here on the chart, price is moving lower. Again, this is an hourly chart, and therefore we see the hourly momentum moving lower. We actually come down here, we put an inverted head and shoulders like a triple bottom, and momentum turns to the upside. Just like you see your brother running to the front of the house, momentum shoots higher. So what we're going to do is sell a credit spread with the short strike and long strike right in this area. And we only have to be in this trade for 11 hours. As long as this price right here, all these bars, does not turn around and touch the top, the short strike of our credit spread up here, we get to keep all that money. But that's pretty good because price momentum is going higher. You can see it down here with our momentum indicator. Okay. And price action is going higher. Everybody understand that? So again, it's that same game of keep away, hide and seek. And as long as you stay hidden and away from that price and it doesn't touch you, you get to keep all that money. So as we keep going here, we hit this sideways consolidation channel. Price takes off to the upside again. Price momentum goes higher right here. So what do? We sell the credit spread right here. Okay. We get a double top. And because the price doesn't touch it in 11 hours, we get to keep that money. So 11 bars, we get to keep that money. We have a double top, then price starts heading lower. Price momentum starts to go lower. So what do? You sell the credit spread up in this space. Probably, I drew it a little bit low, but above those double tops. So we sell the credit spread up here. Price momentum, it goes lower, price stays lower. It stays away from our credit spread. We get to keep the money. It goes into consolidation again. It breaks that support out of that channel. Price momentum goes down. Okay, so what do? We sell a credit spread up here. Everybody follow? We hit a consolidation again. Price momentum price action shoots down. Price momentum shoots down. We sell a credit spread right here. Okay? Now remember, each of these expirations, each of these credit spreads is worth 5%. So let's do some theoretical numbers. So we're going to take $10,000 of buying power. and we're going to use that to do this credit spread. You get a 5% return on $10,000 is what? $500, right? So I risk 10,000 or not, that's not the risk. That's the pure risk, but again, we have stop loss rules. I know somebody's going to ask that. So we have stop loss rules in place. So each trade, we put 10,000 here, we make 500. Do this trade, we make 500. 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 So there's 1, 2, 3, 4, 5. 5 different trades. We use the same $10,000. We do it 5 times. And in this time frame, which is 1 month, we make $2,500 with $10,000. So how much did we grow the account by? 25%. Because someone asked me, how long was this? This was basically the beginning of March, and this is the end of March in this particular example. So in 1 month, we take 5 trades and we grow the account by 25%. You see, that is the power of consistent 5% returns over time. Again, this is the power of compounding. By the way, we didn't compound the money. Okay, we just use the 10,000 each and every single time. But that's how you can apply this strategy. That's how you can create a consistent income stream. Okay, just by selling away from where the price is going. All right. So again, our 11-hour option strategy is dependent on theta decay because we want time to work in our favor. Our goal is consistent trading and 92.9% winning over a large number of trades. We want to balance reward risk. Sometimes people ask me, Dave, sometimes I can get 6%, 7%, 10% on these credit spreads. Can't I get that? What you're going to find is if you extend yourself too far and try for 8, 9, 10% gain, you're going to have to sell the credit spread much closer to the current price. And that decreases your probability of success. Again, what we're trying to do is get a good balance of reward risk. And what we've found is to try to implement these strategies at anywhere from 4 to 5% per trade will allow us to get that consistent rate of winning with a reasonable reward per trade. Okay, you want to have great risk control with a credit spread selling strategy. What we try to do is limit the loss to 2 times or 3 times, like in the examples I was showing you. Well, let me just give you a better example. If we're trying to make $100 per trade, the most I'm willing to lose is $200 to $300 per trade. Because remember, I'm winning at 92%. So I can experience a loss every once in a while. Here's the best way I can have you visualize this. Because these are just numbers and they're like, okay, I kind of understand it, Dave. All right, I want you to close your eyes. I want to basically give you an example of your trading right now. Right? You're on a road in the middle of the desert, and in the distance, you see Las Vegas. The bright lights, the shiny lights, and it's just glowing. And you know that's where you want to go, right? And you're going down this road. But the progress that you make down this road is like you're trading. Now, let me see if I can get this right. Your trading is I'm going to take 2 winning trades, 1 losing trade. So 2 steps forward, 1 step back. And then I'll have a nice string of winners, 3 steps forward, and then I'll take 2 steps back. 2 steps forward, 3 steps back. So you feel like you're dancing backwards and forwards, trying to get to the glowing city in the distance. That's your trading. My trading with 11-hour options is basically 18 steps forward, one step back. Now, my one step back is bigger than one step forward. It might be the equivalent of 2 steps or 3 steps, but I'll still take a little step back. I don't care, because the next 19 steps forward gives me tremendous progress. And then I'll take 2 steps back, and then 19 steps forward, and then 3 steps back, and then another 18 steps forward, 2 steps back. Who's going to get to the glowing city who's going to get to the glowing city first, me or you? Okay? That is progress. That is consistency. You don't mind the small loss because you're looking forward to the progress you're going to make in the next run. Okay? That's what I mean by giving really good loss control and keeping your losses at a minimum. All right, so let me talk about one trader that we have. His name is Jim H. He's actually a trader in our trading room. And Jim had been trading with us over a year. Now, before I had met him, October 2017, in a live in-person boot camp we held in Dallas, Texas. Now, Jim, I taught some advanced strategies with income trading, and Jim approached me during a break. He said, Dave, I've been watching you trade this 11-hour option strategy for a year. I said, I just had a chance to do it. Jim's a CPA. He's a good old boy. I really like him. And he said, Dave, you convinced me. I met you in person. I'm going to give this a good shot. Okay. I'm going to start here in November and commit a certain amount of money, and let's see how we do. So I kept in touch with Jim, and he was trading 11-hour options just in the SPX, the same security I just showed you. And he said, I'm going to use good reward risk and use good stop loss levels like you teach me. And a little secret, a lot of the trades Jim took were the trades we actually did in our trading room. So all the SPX trades. Now, he had some results he was very pleased with. He traded November, December, and January. Okay, he had such good results in this period. He goes, Dave, I'm going to give it another 3 months, see how we do. In 3 months, February, March, and April, in the 6 months he traded this strategy with me, he had 0 losses. And he was trading up towards 3 trades a week. So we're talking 26 weeks, close to 60, 70 trades, 0 losses. Okay. So this is his statement from November 2017. The first month out, he had a 28.8% return. Second month out, December, he had a 16.9%. I asked him why it was a little low. He said because it was holiday season and I only traded like half a month. So I said, okay, that makes sense. 16.9%. Now, January, this is where he really got going, 38.3%. Okay, so Jim is making very consistent money. This is why he decided to keep going. So this is February, 24.7%. Now, remember, Jim is a CPA, so he's working pretty much full time at this time. This is his busy season. And just fast forward, he kept going. Like I said, he just kept doing month after month. By the time he got to May, he was still trading the strategies. Now, he had to take care of his daughter. There were some family issues. So he only traded 2 weeks. But before he left to go to North Carolina to visit his daughter, he sends me this text with these 3 statements. Because at this time, he's trading 3 full accounts now with this strategy. And he said, okay, Dave, I just want to tell you how I did. So only trading 2 weeks in May in this account, he made $3,286. This account, he made $4,340. And this account, he made $3,176. Now then he sends me the rest of the text. He said that totals all 3 accounts, $10,800 for 2 weeks in May. 2 weeks in May. Okay. So in case you didn't catch exactly what happened in those last three statements, Jim traded 2 weeks on accounts that totaled $92,712. He generated $10,803 in 2 weeks, which resulted in an 11.65% growth in 2 weeks. That's more than the S&P 500 does in a good year. A good year. Now remember that thing I showed you from Vanguard, they're saying you're going to make 5% per year in the S&P 500 for the next 10 years. Jim basically doubled that number in 2 weeks. Okay? So let's keep going because I'm like, okay, well that's May. Let's see how he sends me the same statements in June 2018. He said, Dave, want to let you know this is how I did this account, $8,460. This account, he profited $6,017. And this account, he did $5,852. If you break that down in June, he started with 103,000 because of all the money he made in May. Okay. He generated over $20,000 in profits in the month of June. And that is a 19.6% return. And if Jim just kept trading the same number of contracts, the same number of spreads, he could sustain a revenue stream, an income stream in his trading of $240,000 per year. $250,000, not changing anything. And he could basically be doing that with a $100,000 account. Think about that number. Think about that rate of compounded growth. Okay, and this is one of our traders. He's doing, and Jim is still taking these trades with us. Okay, he's actually under a personal mentorship with me now, but he is consistently bringing in money. Okay, so the question is, are you ready for developing an income stream yourself? Because an income stream will allow you to maximize your profitability with 11-hour options. It's going to increase your consistency. If your win rate right now with the way you're trading is over 90%, then that's great. Keep doing it. But if you want the level of consistent, regular returns, this is the way you need to trade. The other thing about consistency is how often do you trade? We put 11-hour option trades on every Thursday around noon. So today, for an 11-hour option trade that expires tomorrow, okay? Put an 11-hour option trade on Tuesday, expires Wednesday, and a trade on Friday that expires on Monday. So we trade 11-hour options minimum 3 times a week. And because we do it so consistently, we grow our traders' confidence because they develop skill, they develop experience, they develop familiarity with different kind of markets. So they can't help but become better, more confident traders, because what they'll eventually become is what they set out to be, a consistent, profitable trader. Okay, now's your chance to be in that profitable 10%. The 11-hour option spread workshop is available to you now as a it is pre-recorded, so it's already available to you now. I've had traders pick up 11-hour options, watch it over the weekend, and by Monday they're up and running. Okay, basically it's how to develop a full-time, weekly, consistent income just being on the markets part of the time. Okay, you have a way of generating high probability income trades every 2 days. The 11-hour options workshop will teach you that. You saw how I was basically diagramming up that chart earlier. I'm going to teach you the step-by-step method to following the markets so that you can optimize where you sell those credit spreads each and every single time. I'm going to teach you in detail that risk control method of limiting your losses to 2 times or 3 times the amount that you consistently try to get. And this fosters long-term profitability because you're not going to win every trade. Okay. It's not 100%. So when you take that step back, you want to control that pullback, and then you take the loss, then you look forward to the next winning streak. Okay. And because 11-hour options is structured the way it is, we evaluate the markets pretty much every day. And we can set up an 11-hour option trade every single expiration. Okay. It's a setup that you can run profitably 52 weeks a year. Okay. Now, here's one thing that we're going to be including in our offer today for you. We're going to include a 30-day trial of our BaseCamp Trading Platinum membership to you. What's neat is our membership has in our Pro Trading Room format, we have an email, an Android, an iPhone. We produce these trades and we send them out to you by email or the iPhone Android app. Okay. Basically, this gives you access to the 11-hour option trades that we take in our trading room each and every single expiration. Okay. These are the exact trades that Jim still uses, and a large number of our traders that do this type of trading on a regular basis. Right now, I'm actually holding an intensive, and I have probably a dozen and a half traders that trade well over $100,000 in these 11-hour options every single expiration. Okay, so and then someone asked me before, doesn't that like decrease, the market? Don't you guys, suck up all the liquidity? The answer is no, because we don't trade small volume stocks and indices. We trade SPX, and it trades thousands and thousands of contracts. Okay, but the nice thing is with this 30-day trial, you're getting the exact same trades that everybody uses, and the total value of that membership is $97 per month. Okay, so what you're going to get with our offer is the 11-hour options workshop. So it teaches you everything you need to know to get started with 11-hour options. Now, I do want to let you know there's some more advanced courses if you choose to continue, or if you decide just to stay with the fundamental strategy, that's fine too. But what we have right now is the 11-hour options workshop plus the 30-day trial for the platinum membership, and the total value there is $443. Now, what we're going to do is throw in a ton of bonuses because, like I said, we've been doing this for over 4 years. We want to make sure that you have everything you need. We have the trade worksheet. So basically, that's just a checklist. You check off the boxes. You definitely have good 11-hour option trades. You want to follow a consistent pattern. That's why we implement it in the form of a checklist. Then we have the calendar checklist, what we're looking for in terms of economic reports, earnings reports, things like that we might want to be careful of when we're doing 11-hour options. Then I give you a trader's spreadsheet. This is where you track your trades to see where, because all good traders track their trades so they can go back and review how they're doing. All the slides in the 11-hour options workshop, we're going to include that as a PDF. And then we have the trader's tip sheet.
Okay, guys.
That is,
we're up against.
There's a little bit of feedback there, Raleigh. Okay, and then thank you. And then we have a couple bonus videos. This one is probably one of the most important because it goes hand in hand with your trader's spreadsheet, and it's becoming a better 11-hour option trader. Basically, I teach you how to go back and look at your old trades and how they unfolded, how to process those in a way you can learn from your mistakes, learn from good trades, again, continue learning so you become better at it and take advantage of the experience that you just went through to become a better trader. And then I include 2 more bonus videos, basically the Thinkorswim Trader, how to implement 11-hour options on the Thinkorswim platform, and the TradeStation Trader is basically how to implement 11-hour options on the TradeStation platform. Those are the ones that seem to be the 2 most prevalent that we use. All right, so again, we're going to throw in those bonuses worth $199. Total value of this program is $642. But you know what, folks? We're not going to do that for you. We really appreciate being invited to speak with you today. Special webinar offer, this entire program, $49. And I tease a lot of my traders and I say, you know what? $49 is probably less than the commission you will pay in your first set of 11-hour option trades. I mean, it's just, we're trying to give you some tools and advantages in the markets to come. And this is by far the most consistent way to make regularly occurring income. Now, someone might ask, well, you mean that's the only way I can trade? No, this complements everything else that you do. The nice thing is you don't have to change the way you're trading. You just do this in addition to it, and it will provide you that baseline level of income so that you always have some money coming in. Okay? So I'm just going to do this. I'm going to go ahead and see if you guys have any questions. I know Raleigh was going to help me out with that. So I'm going to just put the offer up here. Raleigh, did you have any questions, sir?
Sure. There were several questions, Dave, that came in, and let's get right to it.
Yes, sir.
One of the questions that came in is, do you ever close a position or do you just let them expire?
That's an excellent question. And functionally, traditionally, income traders always think about that. Now, the fundamental strategy I teach you, if it's not broken, you don't have to tinker with it, because a lot of times, because we're taking good trades with momentum working in our favor, and because of the time span that we're in it, just 11-hour options, we're relying on that momentum and that support and resistance level to be working in our favor. What we actually find is by the time we're about 2/3 of the way through the trade, basically like Friday, if it's a Friday expiration, by noon on Friday on a successful trade, it's sitting there at maximum profit. And usually we have this huge buffer between the current price and our credit spread. There's no way it's going to turn around and come against us. So functionally, we just leave it alone. Why pay back any of the profit you're going to get in a couple of hours, and why pay an extra commission? So usually we just leave it alone. Sometimes we can close it out, but other than that, we just leave it alone.
Another question here. Maximus, he says, hey, what if it gaps against you? Your stop loss won't help, right?
That's correct. And there have been cases where it does gap, and that's where some of our advanced strategies come in, where we actually actively defend the credit spread. Little tip here. What we do is we manage the delta of the credit spread plus additional options to take advantage of that. Now, I would probably say that the worst loss we probably took was we probably lost about 40% of the maximum we could have, and that would have been like on a $10,000 trade, would have been a $4,000 loss. But the nice thing about that is with 11-hour, let's put it this way: if you take a credit spread that lasts a week, I've seen credit spreads that last a month. You have 7 days, 20 days of exposure to these overnight cycles, because that's where most of the gaps occur.
Right.
11-hour options, we just have one night. Okay, we just have one night of exposure, and it's usually the case we stack a lot of things in our favor, both momentum and support and resistance levels. So we try to minimize that as much as possible. But good question.
Sure, and just almost a little bit of a follow up to that.
Sure.
I get the impression once again that the way that you have structured things over time is that like, this is week in and week out what you do. So
Hmm.
if you have a big announcement coming out like on a Friday,
Yep.
like a FOMC statement or
Yes,
something
sir.
like that, do you pay any particular attention to that, or
Yes.
you're going, hey, Riley, it's factored into what we do?
No, actually, you know what? That's an excellent point. You're right there at the end of your question. It actually is factored into the markets a little bit because what we get, excuse me, is a higher implied volatility on the option. So you actually get more premium, but we don't go in there and take more premium. We actually expand the distance from where we sell the credit spread to the current price. It is adjusting for that potential volatility. Now, to answer the question regarding the event, there are some times when, and we're evaluating this in our trading room too, what is the likelihood of the event to cause a major move?
Okay.
Okay, like last year, a lot of FOMC announcements, right?
Hmm.
Well, every single time they raised the FOMC meeting raised quarter point, we actually knew, and the market knew they were going to do that. So the markets actually, we could actually tell which way the market was going to respond
I
to a
got you.
certain extent. Now, the nice thing is that's not until like 3 o'clock or 2 o'clock on Wednesday, and then we have an expiration. So a lot of our traders said, you know what, Dave, I've got about 60% profits already. I'm going to just take it off. And that's one of those conditions where you could take it off early.
Sure.
And but these are things that because we can see how the market's acting, and it's so close in time, we can make adjustments. And the nice thing is, if you basically decide like, you know what, it's too much risk, I don't want to trade, step aside, and then you'll have two more trades that week anyway. So you're never really missing out on trading opportunities. If you're trading month-long credit spreads, well, you only have 12 of those a year. We have hundreds that we.
Exactly. Couple more questions
Yes,
here.
sir.
Kind of put these together.
Okay.
This Wayman says it looks like to use safe money management that you'd probably need to have an account of at least 200 to 250K in order to trade at 10K per trade. So that's one part of the question, and the second
Okay.
part was how many contracts was Jim trading?
Jim, let me put it this way: in order to generate 5,000 a month, which is what he 5,000 per expiration, he was trading 200. Well, this is what he's trading now. I'm kind of jumping ahead. Jim
Sure.
is trading over 200 contracts per expiration, so he's generating close to five, sometimes 6,000 Monday, Wednesday, Friday. So
Hmm.
he's generating almost 20,000 per week.
Okay.
Some days. But to answer the question on the size, what I actually, because I can't recommend an exact size because I'm not an investment advisor. I don't know your personal situation, but when I do an intensive program, I usually suggest using the framework. If you've got $100,000 account, only trade with 1/3 of it. But that 33,000 can generate can you, that's a huge number. I don't want to throw a big number out there because it's huge, but like you say, you have a $50,000 account. You're going to trade, say, with 15,000, okay, and then you're going to trade roughly 30 contracts. 30 contracts can generate $750 per expiration. That's 2,000 a week. That's 8,000 a month. Okay, with
I got you.
15,000, you see, but that's with a 50,000 account. Now I have a lot of traders that don't listen to me, but they'll trade a 25,000 account, generating $2,000 a month, a
I
week,
got you.
a week. So
I got you. So it really depends on the kind of risk management strategy that
sure,
you put in place. But I think your
yep,
point is um, that let's see here. I got some things that are popping up here. So but we have. Let me just kind of shut those things down. I don't multitask well. I'm at my
yeah, it's
computer, and all of a
okay,
sudden things
Raleigh.
start popping up, and I'm going like, what? Stop.
No, I
But
know where
anyway,
you're going. It depends on the trader. It depends on their experience. And I really tell traders, look, when you start 11-hour options, paper trade it. Get a couple of trades under your belt so you can get used to the just doing the trades, and then
Right.
start with one contract, then go
Sure.
two, then go four. And then by that time, you'll know what your capacity is and gain some experience. But
Sure.
the nice thing is you never have to rush, because this way of trading is how institutions trade. So these things are never going to go away. You're just going to get better and better as your account grows. So this, I mean,
Absolutely.
start slowly. It's going to be there. It's a lot of fun, and excellent way to trade.
That sounds great. Well, listen, Dave, I want to, on behalf of everybody here in the room in Westmark Trading, I want to thank you for kicking things off this morning
Thank
with
you.
just a terrific presentation. Really liked the way that you set things up, the overview for the market, and then also talked about the kind of products and services that you offer and sharing with us some examples. So, folks, a lot of questions that you have with regard to the renewable costs of this, that, and the other thing, I direct you specifically to go to BaseCamp Trading, and that information is there for you. And I encourage you, if you're interested in what's going on here, to take advantage of Dave's incredible offer of $49 to go ahead and get a much deeper look into how this might benefit you. So, Dave, we have some other things we need to get to here,
All
but
right.
I want to
Thank you, Raleigh.
again for your time and for a terrific presentation.
Thanks, everybody. Thanks, Raleigh. All the best, everybody.
All right, guys. Bye-bye. Okay, folks, I'm just going to switch screens here for a minute. And as I mentioned earlier, we've got a full plate today. We have 3 market masters on top, and our next market master is Bennett McDowell from Traders Coach, and he's going to be sharing a presentation today that he calls Top Secrets for Picking High Probability Trades. Now, Bennett is the founder of Traders Coach, and he's taught his applied reality trading technique to investors and hedge fund managers in over 80 countries for the past, I think, 16, 17 plus years. He's been actively doing this. And in today's presentation, he's going to be sharing how to uncover breakout trends before they happen. That's cool. Secondly, he's going to be talking about secret chart patterns that consistently make money and trend line techniques that make all the difference. So with that, let's just get right to it. And please join me in welcoming Bennett McDowell to our webinar this morning. Good morning.
Raleigh, how are you? Good to see you.
Nice to see you too, Bennett. I'm doing just great.
All right, good. Give me a second just to get set up here so I can show my screen, and then I'll go ahead and get started.
That sounds super. And just for those of you that may be joining us here, I just want to remind everyone that today's presentations are being recorded, and we're going to send those to everybody that registered for the webinars over the next couple of days. And secondly, as regards to questions and things, I am going to be monitoring the question panel, and for Bennett, for example, he may pause during the middle of his presentation or sometime and ask me if there's questions, or he may want questions held to the end, but it doesn't really matter because as questions pop up, put them in the question panel and I'll make sure that they're addressed. So with that, Bennett, I'm going to turn it right over to you.
Well, great, Raleigh. Thank you for having me today. It's great to be here, and a special thank you to everybody for attending today. All right, we're going to talk about top secrets for picking high probability trades, and we're going to have a lot of fun with this because we're going to talk about what you need to do before the market week starts. You know, the big point of picking great trades is being prepared, right? So you got to do that before the market opens. So we're going to talk about some of the things that we do to get prepared over the weekend. And we're actually going to offer you a service at the end of my webinar on a service that actually will help you get prepared for the week. So definitely stay for the end because we're going to cover a lot of good stuff and give you a lot of helpful points. Now, the other thing too is a lot of what we've been doing for about 25 years. I've been trading the markets for about 25 years. We started traderscoach.com in about 1998, went public in 2000. So we've been actually consulting and helping traders now since then. And it's just been a lot of fun, and we've learned a lot about how to get you set up and get ready for the upcoming trading week. So let's go ahead and get started here and walk our way through some of the things that you could do. Now, I'm going to ask you a lot of questions during the presentation, And so some of these things I'll be able to see and some I won't, but I'll kind of have a pretty good response because I've been doing this webinar for quite some time on generally how the skew of answers go. But before we get started, quick presentation disclaimer. There's risk in trading. I think we all know it. I think when you signed up for today's event, they talked about that as well. We also like to make sure you're using risk control. I think that's really important as well. So if you don't know much about risk control, definitely find some books on it and get toned up on that. We'd like to invite you to our website as well. Okay, we're at traderscoach.com. We got a lot of free information there, so please drop by. I've written a number of books that are available on Amazon and Barnes & Noble. And here's one on risk control called the Trader's Money Management System. You may want to check that out. We have one on the art of trading, which is our applied reality trading approach. Survival Guide for Traders. Basically, this book tells you how to run a trading business right from your home. And then, of course, Elliott Wave Technique Simplified, which is a form of technical analysis that we've been doing for a long, long time that gives us a roadmap of the market. So the idea here is you want to hit the bullseye as often as possible, and you want to do it with risk control. That's really the key of what we're going to be talking about. You don't want to get into stocks or ETFs or whatever market you trade, Forex, futures. You don't want to get into markets that are stagnant, not moving. So the next thing you need to ask yourself is, how do you find those? Well, there's a variety of different ways, and we're going to talk about that today. Before we do, I just also want to offer our free market report. I think the link can get put up there in the chat area. And I think, let me just check to make sure that's up there now. And I'm not sure it is, so I think I'll put it in there and see what we got here. Okay, hold on one second. It looks like, yeah, I think that probably reached most everybody. All right, if not, please somebody put that up for everybody to look at, okay? All right, so definitely grab a hold of this. It gives you a synopsis of what's going on in the market, kind of what we do to prepare for the upcoming week. All right, so the next thing I want to talk about here is I want to ask you guys a couple questions. And one of which is going to be, would you like to start each week with a game plan and a list of high probability trades? Normally when I ask this question, everybody of course says yes. I mean, who wouldn't, right? So the idea here is, how do you do this? Well, we've got a variety of different ways we're going to show you on how to do this, but you have to also have some form or way to scan through the 1,000 of opportunities, whether they're stocks, ETFs, or futures, Forex, bonds. Doesn't matter what vehicle you're trading, you have to be able to sort through those. And you have to be able to do it, all right, at a time before you actually are crushed for entries and exits. So in other words, be prepared before the week starts. All right, the next question is, would you like to know what the market probabilities are each week at the beginning of the week? If you're trading stocks, it's kind of important to know what the Dow's doing, because you don't want to row upstream against the current of the Dow. All right, so it's really important to have an overall feel for the market and the sector that you're trading. That's really super important. And that goes for, again, futures. You don't want to go against the sector of grain, so to speak. If you're trading soybeans and whatnot, you always want to go in the direction of the flow of the overall market. All right, action steps to get you there. Let's talk about action step number one. All right, again, we mentioned this: scan to find the best trading market sectors and create what we call a watch list. Now, I know many of you know what a watch list is, and a watch list is basically a list of markets, stocks, futures, again, whatever you trade, that may not be quite ready to go into right now, but we want to watch them because we're looking for either support or resistance levels to get broken in order for that to trigger a trade. Now, you don't want to have a million charts open, so you want to create some type of watch list with alarms on them, you know, a tabular format. And most of the charting platforms today allow you to do that. So we recommend that, even though you may come across or scan for a stock that's not an immediate buy or sell currently, It may be one that's really good in a week from now and you don't want to miss it. That's when you put it on the watch list. Okay. Now, the goal again is to uncover markets in play or about to be in play. So you don't want to get into stagnant markets. I said that once already, and it's really important. I'm sure everybody out there have gotten into markets and then they drift and your capital just sits there. Meanwhile, there are other trading opportunities that you may have missed. So you want to be careful about that and choose your selections very carefully. Now, for what we do is we look at the momentum of each particular market. And we set up scans for this, and we look for momentum with good liquidity. All right, good liquidity equals good price fills. We also look at emerging global trends. All right, we uncover emerging sectors. We take a look at analyst upgrades and downgrades. All right, and we use technical analysis and scan for certain market cycles and things we're looking at. Now, with that said, what you want to remember here is that we don't enter a trade just because it's upgraded, but we may get led to that particular market because of an upgrade. And then using our technical analysis on our trading rules, we see if there is an opportunity there. So just because it's recommended doesn't mean you jump into it, but these are how you find potential opportunities. So I think that's important. You don't want to bury your head in the sand and just rely on one form of finding market opportunities. Action number 2, the next thing is once you find one, what do you do with it? Okay, so we need to identify key entries and stop loss points, and of course, profit target zones. Why do you need the profit target zones? To calculate your risk to reward ratios. Okay, because you don't want to go into a stock that has a poor risk to reward. Okay, we avoid those. So the goal here is to determine the best time to enter and exit a market that's already in play for profit. So we're going to apply high probability of matrix of technical analysis. We got a variety of different things we look at from a technical standpoint, indicating whether it's a bullish or bearish trade. But again, you want to connect the dots, right? You don't want to just have one thing saying something that you're looking at without being able to see the overall picture. So you got to connect those dots. And that goes with regardless of your trading system, because a lot of people will have several indicators in there, and you want to be able to make everything point to a good trade, all right, in the direction. All right, so you want to uncover the best trading patterns, including key breakouts. We look at Fibonacci price levels, 1, 2, 3 breakout price patterns, and more. We identify key exit price levels and price profit target zones. And knowing when to get out of a bad trade is as important as knowing when to get into one. Okay, so the idea is that we're not going to win on every trade, so you have to use risk control. You have to adhere to your stops. You have to calculate your trade size. You should know your payoff ratio and win ratio, because that all comes into effect on calculating your risk that you want to take, which really leads to the trade size eventually of the market you want to trade. So our goal obviously is to make money. Okay, that's what we're here for. We're not here for an education on how to lose money. I think we're all pretty good at that. We want to learn how to make money, right? So finding high probability market patterns for trading opportunities is the first thing we want to take a look at in order to do this. Now, one of the things that I like to look at, all right, is I like to look at consolidations in the markets. I'm sure many of you, especially no matter what book you pick up, they all talk about markets trend about 65% of the time, or trend about 35% of the time, and are dormant or channel-based 65% of the time. So the idea is that a lot of times when you look at a market, it may be consolidating. Don't write that market off. All right, that can be one that can go on your watch list, because when it breaks out of a consolidation, it could trend quite large. Now, the longer the consolidation, the better for the trend, the bigger the trend will be. So keep that in mind. All right, we also look for what we call fractal 1, 2, 3 breakout price patterns. We have software that identifies these and also takes into account momentum. It's called the ART software. I'll show you a chart in just a minute. We also look for reversal day pivot points in the market. We look for markets breaking trend lines. We look at Elliott wave wave 4 target zone. So if you're into Elliott wave, we cover that as well. We look for Elliott wave 5 tops and bottoms. And we establish these zones through Fibonacci. All right, very important way in which we look at the markets. And if you look here, here's a great example of a consolidation here and then a breakout. So if you had scanned in this area here, you probably would not have been that excited about this market and you may have written it off. And how many people have come back and looked at a trend like this and said, geez, if I only got in here. Well, if you scanned for bracketed markets, this would have been on your watch list. You could have put an alarm at the top of the channel. When it broke, you could then check your trading system and see if that is also initiating a buy. And we got one here. So here, let me just go over real quick. Here are these little triangles here that we use for entries. It's pointing in the up direction for a positive trend. But then we have to look down here to see if momentum is positive based on our optimum wave locator indicator. It is. We want to make sure there's no red, preferably green down in this indicator, which is the PTF. By the way, when this indicator is green, there's a 75% probability the market will make more highs. Also down on this here is called the TLM that starts tracking the trend. And notice the trend line, the trend started breaking to the upside, so this turned green at this time. And then we trail our stops right on up here under these pyramids until we're stopped out. But the key here that I want you to realize is that this is where you want to put it on the watch list during that consolidation. And I could show you chart after chart showing these consolidations with breakouts, like on this one, where it breaks out of the channel, your alarm goes off on the upper band, and you take a look at it and see if it looks pretty good in terms of momentum and everything else. All right, same thing with this one. Looks the same, but it's a different stock. So scanning for consolidations or bracketed markets, very powerful. All right. The other thing we take a look at is the Elliott wave. Now, some people like it, some people don't. We actually like it, but we know how to use it. And we've been doing this a long time. And basically, Elliott wave states that there are 5 waves in an overall trend. Waves 1, 3, and 5 all go in the direction of the trend and are called impulsive waves. When you get to the end of 5, the trend is over. And then it goes either into a correction or a change in trend. Waves 2 and 4 are minor pullbacks in the trend and are represented by ABC corrections. So those are 2 and 4. So there's 5 waves in the overall trend. So it's really important that, for example, if you had a big move up and you have a wave 1 pullback, to realize that also wave 2 can retrace all the way 100% to wave 1 and form a double bottom. So you need to put your stop under 0. Don't put it up too close here, you're going to get stopped out. Likewise, it's important to know if you're beginning a wave 3, all right, to be more lenient on where you put your stops, because markets breathe, so they go up. You don't want to get stopped out if you're right smack in the middle of a wave 3. And likewise, on a wave 4, it's nice to know that it's a wave 4, not a change in trend going down further. And after wave 4, you want to be there for wave 5. So the Elliott wave can help you a lot in giving you an overall roadmap of the markets. And we use this to help us pick our stock picks and so forth. All right, we also use it to analyze the overall Dow Jones as well. And here it is on a downtrend. So there are 5 waves on an uptrend, 5 waves on a downtrend. Now, let's take a look at Apple stock a while back, and you can certainly see the Elliott wave here if you know how to count the waves. So we have 1, 2, 3, 4, 5, and then a change in trend at that time. And notice that there are waves inside waves that you can also see on this chart, and sometimes you have to go to a lower time frame. So if this kind of stuff interests you, check out my book called Elliott Wave Techniques Simplified. And you can get that on Amazon. And the fun thing about buying stuff on Amazon, I don't know about you, but I love to read all the reviews. So they're kind of fun. All right, so that covers the Elliott wave, but let's take a look at it and see what it looks like on a downtrend, because a lot of people start having a mindset of thinking only bullish trades, but there are profitabilities to be made in trades that are to the short side. And here's an S&P E-mini trade on a very short time frame. So the Elliott wave works on 2-minute time frames, weekly time frames, daily time frames, because of the fact that the market symmetry is the same. In fact, I can remove the X and Y axis representing price and time on any chart. And as long as the liquidity is decent, you're not going to be able to tell me if that's an intraday chart or an intraday chart. And that's called fractal symmetry. All right, so here's one going down into the target zone, and the target zone is established by a fib extension. All right, which leads us to our next talk about price target zones and Fibonacci. Now, I know many of you may use Fibonacci a lot in your trading, and we have found it to be extremely helpful because it is amazing when prices get to the high probability target zones on the fib cycles of how prices turn around. And one of the reasons for that is it takes into account, all right, things like people covering trades that they've been on one particular trend. And if you're having a retracement, all right, then you have the value investors coming in. So there's a whole fundamental reason of why fibs work, but they're also found in nature. And here's an example of a Fibonacci on a storm here on the East Coast. And here's one, this is the one to wake up the guys out there. All right, here's one on the Fibonacci of a woman, all right, swinging her head, and the water's going everywhere, but it's going in a Fibonacci arc, okay? All right, so now that I got your attention, let's go ahead and take a look at another chart here. This is a Fibonacci extension area up to the wave 5 target zone here. And there's always bearish divergence between wave 3 and wave 5. So why am I covering all this? Because when we talk about selecting stocks, there's a lot of different, okay, pieces to the puzzle. And part of the puzzle is knowing when you're in a target zone and when you're not. And a lot of people will be good at entries and exits, but not very good at figuring out target zones. So that becomes an important part of not only picking your stocks. You know, a lot of people get in too late in trends. They get in near the target zones. So we're trying to keep that from happening. And so we're very good at getting you in early on trades. Likewise, this type of analysis can be used on indexes like the Dow Jones and so forth to help us take a look at those. All right, so we got a service called the Market Opportunity Report Service, where it covers trading opportunities as well as gives you an overall look at the market. And some of the recent trades that we've been in, all right, we're able to get you in. We don't like getting you in when a trend is mature. We like to get you in, okay, at the beginning of a new movement in the Elliott wave sequence. And here's an example where we had a wave 3 bottom here, and we were able to get everybody in here early because of the types of things we look at. One thing we look at here is the owl, all right? When you see a deep owl like this in coordination with price movement to the downside, that's a wave 3. And then a wave 4, if you use your fib areas, has a high probability target zone between here. You put your stop under here, all right? And then don't move your stop. This is another big problem. A lot of people never get to the target zones because they keep their stops too close. Keep your stop under here until you get to the 23.6 fib line, then get aggressive about moving your stops up. And don't get out just because you're in the target zone because you don't know how much higher that's going to go in the target zone. So 70% of the time we end here in this high probability. Sometimes we get a failed wave 4 and we only make it here and the momentum starts to turn in here and head down. That's called a failed wave 4, but it is a wave 4. And then sometimes 15% of the time they go above the 61.8 line into an upper band like they're closely approaching on this one. All right, so again, you want to stay with the trade as long as possible. Don't keep your stops too close until you start getting into the target zone. And when we have our trading opportunities that we use each and every week, you know, we keep this in mind for you. And here's one, again, another one. And this was basically on a daily chart. Wave 3 bottom here. All right, long trade entered 17.81 on August 15th. This was a while back. As I said, we've been doing this a long time. Into the wave 4 target zone. All right, so a little bit more about the Moore report that may interest you. The Moore report is designed to prepare you for the upcoming week. And we do this by giving you an overall brief of what the market is doing using the forms of technical analysis I just showed you. We look at the Elliott wave. We're looking at our indicators to see if there are more highs predicted and things of that nature. We also inform you of stock opportunities each and every week, and we update this with a written report as well as a video that I do each and every Sunday. So you have this information before the market opens. Now, what we do with the market is basically the work for you. We do all the market scanning and analysis, so you don't have to. And here's what you get each week. Overall market analysis for the long-term and short-term forecast. We take a look at the Dow, and we're going to give you the short-term, what's going to happen for the upcoming week, as well as some of the long-term view on the Dow. We're going to give you a high probability trading opportunities based on what we've looked at already. You'll see scans, we put things on watch lists, and then when they break out, that's when they go in the report. All right, video and charts with analysis, of course, that's the video I do every week, written report. And then we have every Wednesday, and I'm getting ready to do one in about an hour, is our live weekly client support webinars where you can ask me questions and get answers in real time, and that's for an hour. We're together for an hour. So it's a very comprehensive service that prepares you for the week. And then if you want, you can come in Wednesday and we can touch base with anything that you need updated. And that way we get you through the week. So the next thing here is to take a look at some of the folks that have actually used our service. And David, who's from Illinois, okay, loved our stock picking service. And here's just a little bit about what he said. He said, Bennett pointed out that although the stock was up $6, it has the ability to go up another $15 to $126 and above. And the reason we knew that is because of being able to use target zones. Okay, and at the open, I bought the 4 October 120 calls at 125, looking for a sell at $6 for a 5-to-1 trade. Currently, the trade's at 216. Thank you, Bennett. We get these types of emails all the time from folks that are using the service, not only for the direction of the Dow, but also for stock picking and trading opportunities. All right, so what we want to offer today is the More Report to get you prepared for each week. It's a limited time VIP pricing for webinar attendees at this point. It's $49 a month, money well spent. All right, and you can subscribe using that link as well. And let me just get that link up there in case it doesn't show here. Give me 1 second. All right, I think actually it's up there already. So I think Gene put that up there. Thank you. All right, so there's the link for you. Go ahead and click on that and sign up. It's a limited time offer, so don't wait on it. Now, one thing I wanted to show you here is here is an updated chart on the 60-minute time frame for the Dow. And this is what we cover in the More Report. So here's where we had a wave 5 end, okay, on the 60-minute chart. Now, as of Sunday, all right, prices were right about here on the far right-hand side of this chart. But we've been in what we call an Elliott wave complex correction really since October. And it's actually called a triple flat correction. And a triple flat correction means there's 3 A's, okay, 3 B's, and 3 C's interrupted by 2 X's. So here's 1 X up here, and we're still in the other X here. So we think after this other X, we'll go into another ABC corrective mode. And where the price target zone is and so forth and so on is what we talk about in the More Report. So if you're interested in knowing where the market's going, you'll definitely want this service. A lot of people think there was a bottom put in where it says C here. Okay, we'll tell you what we think in the More Report. The next thing I want to share with you is how we take a look at our stock opportunities. All right, so we have short-term opportunities. These are trades based off a 60-minute chart. So these trades are good for a few days to 2 weeks. So if you want to be in a trade for a short period of time and not a long period of time, this is an excellent place to go. We also have intermediate trades using daily charts, and the trade duration here is 2 weeks to 6 months on these. And then we have long-term trades here where the duration on weekly charts will be in for 6 months to several years. Now, if you want to use options, you can. Now, with the long-term trades, I would use leaps. Okay, so I'll put an L there for leaps. On the short-term trades, both this and this, all right, you're going to have to select the expiration date carefully. On the intermediate trades, you want to make them about 6 months out. On the 60-minute trade, you probably want to make them no more than about 60 days out, maybe even 30. Now, if you know anything about options, you get the most time decay in the last 30 days. So we recommend as much intrinsic value as you can on both the intermediate and the short-term trades, and you achieve that by either buying or selling options in the money. So you want a high delta on that. So that's really important. But a lot of people trade all our stock picks based off option trades if they're option traders. Now, if you trade the underlying asset, we give you the stop exit here. If you trade options, you can certainly get out of the option when it passes that area, or you can use risk control in how much of an option you purchase. All right, then we also give you the price target zones as well for each trade. And then we update these every week. So if we change the stop for whatever reason, we'll indicate and let you know that. This tells you the direction of the trade, whether it's long or short. And notice it's on an Elliott Wave 5 on a 60-minute chart. So we have a key of what all these little symbols mean in this box, and the first recommended dates go down here. Okay. So that's what you get each and every week. And then if they get put on a hold list, in other words, they get close to their target zone and they're no longer an active opportunity, they go on a hold list. And at that particular point, you're going to want to check that because we may adjust the stops on those. And then when we're finally stopped out, they get removed from the hold list. So it's a very organized approach to give you some trading opportunities each and every week. And during the week, all right, you'll have an area where we want you to put your stops, where we suggest to put your stops. All right, if the market moves into the target range, you may want to adjust those. All right, also too, like I mentioned before, we have ongoing weekly live trainings, and they're every Wednesday at 9:30 a.m. Pacific time. So we're getting ready to do one very soon here in an hour. And basically with this service, you're allowed to come to that and we can review any picks that you may have at that point to see if there's any updates on some of the things we cover. All right, so that's pretty much it. I'm going to leave this chart up for just a moment so you can get a hold of a free sample report there. And in the meantime, Raleigh, if there's any questions coming in, because I can't see the questions, feel free to ask and then we'll wrap it up.
All right, that sounds great. So Blazon asks a question. He says, what time frame do you look for day trading stocks for entry and direction?
Okay, well, in this type of service, all right, we offer the shortest time frame we're doing is 60 minutes. And the reason for that is we're only with you twice a week. And with day trading, of course, if you're going to trade like a very short time frame, you really you'll be in and out of the markets a lot each and every day. Now for day trading, I like to day trade, okay, futures markets for one thing. S&P's great, NASDAQ's great, but there's also a lot of E-minis and a lot of the future markets too. The key is you need to be in cash at night if you want to be a true day trader. So we usually choose a time frame under 5 minutes. But we also use multi-time frame analysis. So we'll look at maybe a 2-minute chart and a 10-minute chart, all right, in order to really start timing our trades best. So I think if you're a true day trader and you have an edge, and how do you know if you have an edge? Because of course you tested your system and so forth. And if you have that edge, you want to exploit it as much as you can. So by trading a shorter term time frame, you're going to be trading more often, all right, during the day than if you choose like a 5-minute time frame. So we usually do a 2-minute unless there's a lot of volatility that day in the market. Now, when we talk about preparation for day trading, we have to do that in the morning before the market opens. So when we talk about the more service and preparation, what we're talking about is short-term trades using the 60-minute or more longer-term or intermediate trades using the daily and weekly. And therefore, we're preparing over the weekend because that's all you need to do for that time frame. But when you're day trading a very short-term time frame, you need to get up in the morning and basically do the same thing, looking for consolidation areas in the different markets that you want to day trade for that day. So you do the same thing, but you got to do it every morning. All right,
Sure.
thanks. Good question.
Yep. Next question that came in here is, how often are you right and wrong in the direction that you select? This is from Jurgen.
Yeah, that's a good question. We actually don't even keep track of that. I have to be honest. And the reason for that is because we call them trading opportunities. And the idea here is during the week, people move stops, they do things. And so keeping a track record on everything just is too time consuming. Yeah, we could do it, but then we'd have to charge a lot more for the service. So we don't do it that way. We kind of keep it light and airy. We give you stock opportunities, and then it's up to you to decide what you want to take. We also give you a lot of different information in terms of brokers' upgrades and downgrades, and people use that as well. If you have a stock opportunity on our list and it happens to be on the broker's upgrade, they may, filter it further like that. So that's kind of the way we run it.
All right, great. Well, I think Bennett, that basically covers the questions that came in at this point in time, and I really want to thank you on behalf of Westmark Trading for your time today and for your presentation. Folks, a lot of great stuff was just presented to you, and there's special offers are available to you in the chat box, and I recommend that you take advantage of what Bennett has to offer. A lot of great information there, a lot of good stuff on his website, so please feel free to check that out. And once again, Bennett, thank you so much for your time today.
Raleigh, my pleasure. Great to be here, and thank you too, and thank you everybody for attending today. Have a great week, and remember, use risk control.
Use risk control, absolutely. All right, folks, just going to change screens here for a second. And we are running right on time. And I'm pleased to say that our next presenter is ready to go. His name is Doug Campbell, and he is going to be talking today about following the trend and repeating patterns. Now, Doug, he heads up the Right Way Options team and has been trading and teaching others his simple way to achieving consistent results for over 29 years. So he's got a ton of experience like the rest of the market masters that we bring to you in our webinar series. In today's presentation, Doug's going to be sharing how to quickly identify a trend, which is excellent, the best way to spot a high probability setup, something we all want, and a technique for easily determining a true bottoming pattern. So with that, please join me in welcoming Doug Campbell to our webinar. Hey, Doug, how you doing? Let's see, I think they're going to unmute you here there, Doug. There you go.
You can hear me now?
I can hear you just fine. How you doing today?
I am doing well, and yourself?
I'm doing excellent.
Now, I have to admit, I'm not real familiar with this software package, so give me just a second.
All right.
To figure out how to show my screen. That's not what I wanted to do.
Okay, so now we have you on web camera.
You have me on web camera. That's not good. Hi, everyone.
It's nice that you're dressed.
Yeah. Okay, you're going to have to help me out here, I guess, on how to share screen.
Okay, so I see a little bit of a screen at the bottom, Strategy for Consistent Profits ebook. Let's see here. So you should have a selection when you go to share screen. You should see an option as to what screen you want to share.
Okay, audience view. Okay, I think I'm going to have to move this over here. That'll save things, and then
there you go.
Okay, and then we'll blow that up. Get this out of the way.
There you go. Looking good, buddy.
All right. Hey, we're set up. Hey, thanks everyone for being here today. And I want to thank you all for taking the time to attend this conference. We really appreciate those folks that take so much time to put these events together. It really is an awful lot of work because we've done that before. And what I don't want to waste your time here today. What I want to do is I want to show you how I do well, really how I've survived as a full-time trader for 14 years, trading the markets full-time, putting 2 kids through college, doing all of those things. And I'm just an old carpenter, okay? So I want you to know that if anyone can do this, if I can do this, anyone can. And it's actually fairly simple what I do. I'm a very, very simple trader. I use what I call a naked chart, and we're actually not going to spend much time here with slides, but if you guys take this old quote here from Leonardo da Vinci, that simplicity is the ultimate sophistication. And I have really taken that kind of thought process to heart in my trading. I make my trading very, very simple. I keep it very simple. And I use, again, what I call that naked chart. I'm looking for really good charting opportunities. But I'm using a very simple chart to do that. So we will be jumping to that really, really soon. And I will show you how I do that absolutely full on. Okay. So one of the things that I learned a long time ago, I struggled for years and years and years. I'm just like everyone else. I mean, I really suffered in the market for a long, long time until I finally started to get things figured out. And I tell you, I was really close to quitting trading, and I was doing some cleaning up of my my charts and things like that. I was just I was done. I'd had enough. I've been beat up too much in the markets. And when that occurred, all of a sudden I realized something very, very simple, that the market had been trending up, and somehow I'd been losing money in an uptrending market. And I thought, how in the world could that be happening? How could I be losing money in a market that is predominantly moving up? And I know some of you have felt that way. You know, 2017 was just a tremendous year. We just moved up and up and up. Obviously, 2018 was a little more challenging. We had a lot of back and forth, but we still had great trends in that market. But a lot of folks really lost a lot of money during that time period because we lose focus on what we're trying to do. We do a little too much micromanagement. We try to get too complicated in our trading. And so this finally hit me. The easiest way to make money in the market is to find a trending stock that wants to go up, wait for the next entry into the trade, and then just simply follow it up. I'm going to show you exactly how I do that today and some of the repeating patterns that I use over and over and over in my trading. So first off, I want to ask you guys if this is if you've never seen right way options or anything like that. Obviously, in this short session, I don't have an opportunity to teach you a lot. But on my YouTube channel, just search Right Way Options on YouTube. Go over there and subscribe. Hit that subscribe button. Everything there is free. I have over 450 videos there teaching all the different aspects of my trading. It's all free. So jump on over there, subscribe to that channel if you can. And there'll be another video uploaded today that I did an e-learning session last night for a large group of folks, and I will be posting that to YouTube later on this afternoon, so you can catch all that information. Also, by the way, I do a morning preparation video every single morning, and that's free to everyone, where I go over the details of the market, show the support and resistance levels, give you some key things to pay attention to, and then I even give you some stocks every single day, every single market day, stocks setting up for the patterns and things that I trade. So please jump on over there and search Right Way Options, subscribe. Make sure you click that bell icon as well, because that will make sure you get notified in the trades. Okay, now I'm going to jump right in here. This is what we're going to offer everyone, and maybe you can help me out in posting that offer link over there. I would really appreciate it. let me give you this offer link. It'll give you a PDF with a full offer on this. And guys, this thing is really cool. This is a live scanner. What you see here is a live scanner. We have put our very best scans into this system. All you have to do is turn it on and create the windows. Okay, and it takes about 2 minutes to create a window. And this thing runs live during the day. It's populating stocks all day long in these different patterns that we trade. I'm telling you guys, we are going to give this to you for $1 for 30 days to try. And just to give you an idea, we charge $147 a month for this. You're going to get to try this for $1. It's actually going to cost us money for you to have this. I really recommend everyone go over there and get this scanner. You're never going to find a bargain like that again, to have a live data scanner running full time in the market. Now, this is just a screenshot that I took of charts that were popping up, and I can show you one of those live screens here in just a little bit. But that is as much as I'm going to show you today as far as slides. Now we are going to go directly into some charts. So let's give this a second so you can see my charts. And I'm going to jump in and tell you exactly what I do in my trading. Now, like I said, I trade very simple. If you notice on this chart, I have a couple of indicators here. I did a class last night on MACD. I don't use MACD most of the time. And honestly, this is what I use. A little bit of volume and a whole lot of chart. Okay. I follow the price action of the chart. Now, when you're looking at these charts, you're going to see these pink lines. Pink lines are actually trading alerts that I have set up. And I'm following a watch list. If you take a look right here, this is my option focused watch list. I'm an option trader predominantly, so I trade mostly options. I follow a qualified list of options. I saw the last speaker was talking about follow a list. Keep a good watch list. I don't search for everything in the market. I follow a qualified list of stocks that I know have good option ability or good stock setups that I can trade. And I follow that list religiously, and 99% of all of my trades will come straight out of this list. In fact, there's more trading opportunities that I can possibly take. I don't have to be chasing around the market. So you can see these pink alerts are set up, and I just simply draw up the support resistance in the chart, and I wait for trades. So I'm going to show you a trade, actual trade, that I just told everyone today they probably should take profits on. And that's MDLZ. MDLZ, I alerted on this trade down here, and as you can see, we have this long-term downtrend in play. We broke above that long-term downtrend. We also broke above this short-term downtrend that was in play in the chart, okay? And then we consolidated. We have this nice little tight consolidation. Now, before I go any further, I want to tell you that I have built my career, 14 years full-time as a trader, trading basically two patterns. Okay, two patterns in the market. Those two patterns are a trending chart when the stock is trending up, okay, and I wait for a pullback to the trend. I call that a pullback opportunity. You see right over here, stock's trending up, pulls back, holds onto its trend, broke its downtrend, holds onto its trend. I put an alert on the chart and I wait for the trade to come to me. I enter those trades the same way over and over and over for both long trades and short trades. Okay, so this was an actual alert. We had that trending move up. We break the downtrends. We consolidate over to the rising trend. I place an alert above there, enter that trade. Here's a second alert. And I told folks they should be taking profits on this trade today. Be looking to take profits on this trade today because we're getting a little bit overextended in the chart. Let's take a look at Starbucks. Starbucks, very, very simple chart. You can see just drawing up this chart, we can see a nice price pattern, broke the downtrend, broke through this resistance high, and you can see where I started to alert on this trade, and I'm alerting up here, waiting for this to consolidate over toward its trend, and I'll be looking for another entry into Starbucks. There's just tons of these kind of charts right now. AMD is a price pattern that we call the rounded bottom breakout. And let me show you that. I put some moving averages on a chart, and let me get rid of, make sure we don't have any drawings there. The rounded bottom breakout, this isn't a true rounded bottom breakout, but the rounded bottom breakout is basically the stock has moved through a downtrend, and then we cross over. We cross back up, we break that downtrend, and then we start these nice little consolidations and resting areas in here. And this chart right here, as you can see, is actually creating a nice little moving average squeeze. By the way, this just popped up. These are live charts, and this is a live alert that's just popping up on the trade. I do this all day long. Sounds like I got a used car lot here, but that's popping up all day long, and all kinds of alerts firing off because I literally do alert off of these charts, okay? So let's go back here, and that is a really nice pattern. So you can see AMD, I'm looking at this price resistance here, and I've already got this trade basically planned out for an option position. Move up, pull back, consolidating over to the trend. I'm waiting for this to trigger my alert, and you can see I've already placed some price targets in the chart above where I would be looking for those exit points or profit-taking opportunities in the chart. So I'm always following that price action of the chart. And by the way, I do this 2 hours every day live for all of the members of Right Way Options. So 2 hours every single day. And by the way, I share every single trade I make with all of my members. I don't hide anything. Every single trade I make gets shared with the members. Win, lose, or draw, nothing to hide here. I simply trade very simple charts, and I stay very consistent in what I do. I'm very, very strict and very picky on the trades that I take. My members will tell you that. I am ultra picky. I will trade less and make more because I'm so picky on my trades, okay? Let's take a look at that IGT that alerted just a second ago. You can see here's this rounded bottom breakout pattern in this trade. We break above that 50-day moving average. Now, the rounded bottom breakout pattern is a great pattern. And by the way, it is automatically or already built into the live scanner that we're going to give you for $1. Okay, it is bringing this pattern to you automatically. Okay, the rounded bottom breakout pattern was actually created by my partner, Rick Sadler. Rick put the name to this thing, and really all it is the stock has been in an extended downtrend of some kind, and we cross back above that 50-day moving average. If I peel off the price action of this chart and just look at the moving averages, you can see that we get that rounding effect. The moving averages are starting to round over and create that moving average squeeze right here. Now, the pattern calls for the ultimate target to be right up here at the 200-day moving average. And to actually reach that 200-day moving average for our entry here, we require a minimum of 10%. And you can see IGT here has a potential of 22% just to the 200-day moving average up here. And this is one of the most profitable and consistently winning trade pattern I've ever traded. I'm telling you guys, this thing just operates and operates and operates and puts money in your account. Here's a trade that we just recently took in Right Way Options, and it was Win Casinos. Win Casinos is that rounded bottom breakout pattern. You'll see it here in this chart. There's that rounding bottom. We cross above those moving averages. We pull back. We find that support, that pullback opportunity. We started an uptrend, and I place an alert on the chart. Okay, Right Way Options made nice money in this trade. Members of Right Way Options made nice money in this trade, just playing along with this nice pattern that continues to repeat. It's that repetitive pattern that continues to repeat in the market over and over and over. Charts that are actually setting up right now, STZ, if you guys are looking for something, STZ is in that pattern right now. STZ trying to cross over that 50-day moving average. It's dragging that 50-day moving average out while the shorter term averages come up in support, creating that moving average squeeze. And that is actually alerting my alert right now. I wait for that trade to come to me. Okay, so a good potential pattern that repeats over and over and over. And I'm also giving you that price pattern in here where we look for that pullback opportunity. We pull back to the trend. Let me show you the drawing of this chart right here. We pull back to the trend, consolidate across there, and pop out. All right, it works just exactly the same way in a downtrend. Downtrending stocks work just as easily. So we make good money in both sides of the market as the market is trending along, okay? So you'll want to, if you want to take a look at us, we got a special going on right now, guys, for right way options. If you go over the trading room, go over to hitandruncandlesticks.com. I'm going to give this to everyone here. You can go over there and get a membership for hitandruncandlesticks.com at 50% off. Just type in the promo code, type in SAVE50. Okay, and you can get a membership to Hit and Run Candlesticks or Right Way Options, 50% off just for you guys. And take a look at us. You can do a monthly, you can do an annual. It doesn't matter. You can become a member at 50% off right now. Okay. Let's take a look at some of these other trades that could be setting up, because I like to leave folks with ideas for potential trades. AKS. Here's that rounded bottom breakout pattern again. Breaking up above that 50-day moving average, pulling back. AKS is setting up, and you can see my alert right here on the chart. I'm waiting for this to pop up. I don't predict the chart. I don't attempt to predict the chart. I simply follow the chart when it starts moving. That's why I say anybody can do what I do. This is one of the easiest methods of making money that I know. Just find a trending chart, wait for the next entry into the trade, and follow the trade. Stop predicting. Follow the price action of the chart. It's so much easier to do, and it's actually a lot of fun when you start looking at these charts and what you can do with them. Let's take a look at Nike. Several of my members reported taking profits today, nice profits on Nike. Here's that same type of pattern, breaking the downtrend, consolidating over and pulling back, making sure we can hold the downtrend. We prove that buyers are going to support that. So I placed an alert here, catch that entry into the trade, and you can see I've alerted on this chart several times, and I've told people that we should be watching for profits or taking profits here because we're reaching that major resistance level in the chart to be taking some of those profits. So our folks make really good returns. Okay, because I talk about these kind of charts all day long, and you can see I have no shortage of potential trades coming up. Take a look at MYL. MYL is in that pattern. You can see we have a longer term downtrend here and a shorter term downtrend that has been broken. This moves up, holds support, buyers step up in here. Watching this trade, you can see that I had an alert set here. Now, I actually haven't bought this, but I'm watching this closely. And the reason I haven't bought this is I have the belief that this will probably move closer to trend before this actually goes forward to the upside. So kind of watching that one right now. We had a trade alert for us just the other day in Merck. There's Merck. There's that pop through the downtrend. Hold the consolidation, buying, stepping in. That alerted yesterday, following through today. Of course, we have to worry about the resistance up here on that chart. How about MJ? Everyone knows there's been a lot of price action, a lot of things going on in the cannabis stocks, and you can see that same price pattern going on here in MJ. Very easy to predict, very easy to follow, that we don't have to chase or rush. I tell everyone there's no need to rush into a trade. All of these trades will come to you if you give it the opportunity to do so. And you can see, watching and waiting, MJ here for another one. PAYX, you can see what's happened here in PAYX. I like to give you guys lots of examples of how this price action works. Once again, here's that downtrend break. I don't have that marked on here. Here's that downtrend break. Stock breaks the downtrend, consolidates over, buyers step in here, pushing us up, Here's another little consolidation pushing us up to this resistance high. Anyone in that trade should be taking profits and pulling out of that trade. And I can go on and on and on. There's more trades than you can possibly trade, setting up this same pattern. This repeats itself over and over and over in the markets. Let me show you an example of a longer term. If you guys like longer term trades, take a look at Microsoft and a trade that we took in right way options using a leap option. We bought in December 2016, we bought Microsoft here. And we carried that trade all the way over to August of 2017. The reason we ended up getting out in August was we got called away because we sold calls against that leap option, and it called us away on that trade. End result, between here and here, we made a 99% return on Microsoft. And then as you can see right in here, we have that same pattern, move up, consolidate. We entered this trade again and made some more money in the position. So this works on weekly charts. It works on daily charts. It works on intraday charts. It's very, very simple trading, and it doesn't require any predicting. We just simply have to learn to follow the chart. Okay. Now I want to recommend to you before I go, really, really quickly that if you're going to do this, I highly recommend black and white candles and white background charts. For some reason, our eyes are designed to see black and white much clearer. And if you're looking for those price patterns, as you can see, here's that price pattern just repeating over and over and over in that weekly chart. Take a look at SQ. We made a bucket load of money in SQ last year, and we actually made some money on the short term in SQ here recently. But look at this same pattern over and over and over. Just follow a trending chart and let it do the work. Just wait for the next entry into the trade. So with that, everyone, hey, I want to take some time to answer your questions. Do you have any questions for me, sir? Raleigh?
Absolutely. Sir Raleigh. Holy smoke, I was knighted in the last hour. Yeah, so there are some questions that have come in here. One of the fellows says, hey, you know what? I don't trade options, but just wondering, does this strategy work on stocks too?
It absolutely does. As you can see, these price patterns are identical. And
Yes.
Live Scanner is going to bring you those trades that are really setting up right now. So yes, it works perfectly for that. As a matter of fact, let me show you. I have the Live Scanner running here, and you can see just recently it alerted on Baidu. Let me go over here and show you Baidu.
That was that alert that just popped up in the middle of your screen, wasn't it?
Yeah. So here's Baidu, and you can see my alert right here. And this is that stock breaking that downtrend and popping up in this trade. So this is a very early potential beginning to a trend, and a very simple way that we can just follow this trade up if it goes. And you can see it was populating this alert live during the day, just popping up. Now these alerts are running live in the market. The market has to be open for this to work. If you're trading part-time and you cannot trade during the day, just turn on the LTA and let it run. And at the end of the day, you're going to have a watch list of stocks setting up in your pattern.
Mm-hmm.
Telling you guys, this thing saves you so much time. It's remarkable, and it is a great piece of software. We test this thing hard. We push this thing to the limits, and we haven't been able to break it yet.
Wow, that's fantastic. So let me take a look at some of the other questions that have come in here. Hey, I love this question because it's a great question. Obviously, your charts are fairly simple, but you have heavy use of trend lines. And so the question is, from your perspective, how are you drawing these trend lines?
What I like to do is when I'm looking at a chart, I'm looking for those specific patterns that I like. You know, I'm very much a pattern trader. So let's say, for example, I look at that pin that just alerted. We take a look at pin. You can see I'm drawing these downtrends, trying to catch the high points of that downtrend. I look at the charts, and I'll even go way back, and I look for big support and resistance levels, and you can see the stock found price support in here. So consequently, I placed an alert right here on the chart, and there was a winner in that trade. Now, it didn't do as well as Win Casinos or that, but this thing definitely worked, and you can see Penn is now crossing back down. But I'm always looking for those big levels in the chart, and I'll tell you, a black and white chart will help you a ton in finding those. And I teach this stuff every day, 2 hours every day.
And knowing that we're looking at candlesticks at this point in time, do you utilize any candlestick patterns, for example, as you make judgments about what's going on, or you just like the black and white candles?
No,
price action.
Yeah, we do use candlestick patterns, and the live scanner is actually set up. If you like a trending chart with a morning star, it will find you a trending chart with a morning star.
Oh, okay.
If you're looking for a bullish engulfing, if you're looking for whatever, they're all built in. There's about 40 scans built into the software, pre-built. All you gotta do is click them and open up a window, and it's going to live scan the market.
Good Lord.
And what's really neat with the live scanner is this list. I've already qualified this list as being high options. Have you ever looked for an option trade and found out that the stock, it's a great setup, but the options just stink? I don't want to waste my time doing that, so I actually pull this list directly from the CBOE. This last list is the high option volume for the month. So I pull that list, I take about 300, I put them in a list, and then I run that list against the live scanner. So from this list, I put it in the live scanner, and this thing is producing these alerts. You can see it's still alerting Baidu. And the reason it's alerting Baidu is because I've set up the scan to alert on every daily high. So all day long, as long as it's making new day highs, it's going to continue to alert here. And you can see this is a high of 5 bars.
Okay. Interesting. I mean, fascinating, actually, the way that you use automation. It does bring the question in my mind, because some questions have come up along these lines, is that you've got a system that, for example, suggests levels and alerts and things of that nature. What kind of judgment or discretion do you use? For example, we know that there's a volume bar chart at the bottom there. Do you use other factors to determine, yeah, this is a setup, I'm going to sit on this one, or I like this one because these reasons, I like this. My discretion tells me this is a one to take, or you basically take every signal that's there?
I don't take every signal as it's there, because what I recommended that you do, and you can find these videos on the YouTube channel, is to watch the condition of the market. If we take a look at the diamonds right now, every single day I do a full video, it's about 15 minutes long, on the market setup. And I've warned today, and have been warning for the last few days, that we are getting kind of stretched here in the market, and to be very careful about adding too many long trades, because we've stretched this out a little far, and we may be ready for a pullback or a minimum a little consolidation. So one of the real key factors to making all of this work is doing the evaluation or the condition of the market. You know, if I look at this on a weekly chart, I want to show you guys this because this is pretty substantial. Look how long this market has run up, straight up on the weekly. You go all the way back over here, even into 2017, and we don't see a run of that magnitude anywhere.
Right.
So we're running into these price resistance levels and a little bit of concern for the market. So that's when I pull back, and that's when I tell people, hey, you might want to start thinking about taking some profits.
You know, and looking at the charts here, there's another question that came up here was like, do you ever look at the charts less than in a one day? Like, do you look at hourly charts, or do you basically focus on the dailies?
I do. Most of my, I'm primarily a swing trader and a position trader. So I like the swing trade, and I normally look at the daily chart for my swing trades. For my position trades, I'm going to look at those weeklies. But you can see right here, I have a 15-minute and I have hourlies. As a matter of fact, just before we came on, I recommended to everyone looking at this 15-minute chart that we needed to be very careful and consider hedging our trade. So we actually placed a spread trade, a hedge trade on the futures right now that I'm actually in profit on already, because I'm looking at that shorter term as well. But I want you to see that the price patterns are exactly the same.
Yeah.
it's the same price patterns no matter what time frame that you want to trade. They work just exactly the same way. And I'm very picky about those trades that I take. So I watch this stuff pretty closely. And I got to tell you, it's the easiest way to make money I've ever seen in the market. And we have, let me give you just a real quick story before I know you got to go. A friend of mine, never traded in his life. 2 years ago, I finally convinced him to start trading. I had him paper trade this plan for a while. And in 2017, he had a good year to do this. He took his very first live trade in 2017, following all of the rules that I talk about here. He traded options and options only. And his first year as a trader, he made a 65% return in a $25,000 account.
Wow.
So it is absolutely possible to do with anyone, and I believe anyone can do this. It just requires a little bit of attention to detail in that price action.
Well, you know, as we're wrapping things up here just a little bit, there's a few more questions that kind of get at the heart of things. Bertrand says, you know, this is fascinating. If you don't know much or hardly anything about options, how do you start?
Well, what I would recommend if you're wanting to get into options is, first off, just understand options aren't for everyone. But if you're wanting to get into options, I recommend you take one strategy at a time and really work to master that strategy. Don't try to, the old saying, being a jack of all trades, a master of none.
Yeah.
We want to focus in on one strategy. Now, I've taught my partner, Rick Sadler, to do just directional trades. He does no spreads or anything like that. He buys long puts and long calls. Okay, last year he made a 360% return in his account, and he's published all of his tickets are on the website. You can go there and see it. Every single one of his brokerage statements for last year are posted there. Every single trade is listed.
Wow. Well, that's great transparency.
So all he does is trade directional calls and directional puts. Now, he's a very, very good chart reader, and that makes the difference. Okay, he's really good at reading charts. But you can do this pretty easily, and what's great is you can do it with you don't have to spend a ton of money using options. So I recommend you learn one strategy at a time, and think about a service where you can get that education. Once again, I do live 2-hour training sessions with all of the members all day long, where I share every trade. Every trade that I make is part of the training.
It's part of the training. Yeah.
Yeah, it's part of the training. So I follow the rules very strictly and set up those rules. Now, I also do e-learning sessions twice a month on Saturday mornings, and all of those e-learning sessions are archived on the website for members to use and see, so you can get up to speed very quickly in any option strategy that you're interested in. And of course, during the day, you're live with me 2 hours every day. So just ask the questions, and I will go through it as many times as I have to. I really love helping traders turn their trading around.
Sure, and I think there's a couple of things that you said there that I would just want to reinforce to everybody. Like the friend that you that ultimately started trading used the word paper trading, and so it's, learn that strategy, paper trade it to the point that you're comfortable and consistent with it. Take advantage of the kind of mentorship that you get from folks like Doug. There's a question here that says on the scanner there, is that a freestanding scanner, or do you need some special software to get that?
You do not need freestanding software. We actually run the data through our own server. We're getting about 60,000 data points a second. And this is a software designed by one of our partners, a brilliant guy, and his name's Ed Carter. And we had this idea for this scanner. He put this thing together, and I'm telling you, it's just awesome. So we have our own. When I say this is going to cost us money for you guys to use this scanner, it really is, because we bring in all the data that we pay for and then pump it out to you live. And you can have these windows that I'm showing you here. You can have as many as 20 of these windows open. At any one time, and it's pumping you live data the entire time. See, there's more detail in this than just what I showed you in that window, but all the detail comes in, when it alerted, what it's doing, everything that's going on.
Sure.
So it's live and just pumping out that data. And like I say, if you work full time or can't watch the market, just turn on LTA, let it run, and then it's built a watch list for you of stocks that are hitting the scans that you want to see.
That's terrific. Well, listen, Doug, thank you so much for your time today and for this very engaging presentation. I think we all really enjoyed the fact that, you jumped right into the charts and showed us what was going on, because so much of our life is built around, watching the charts, and you've shared techniques with us. You gave us some great tips. And once again, you got an incredible offer. If I remember correctly, it's $1 to use the scanner for a month. And I think they're also offering 50% off on your other services.
Yep.
All
Just
of which
go over to hitrun-candlesticks.com. Check on any of the memberships in there. We'll give you 50% off.
All right, that's fantastic. Well, once again, thank you so much for your time. And it sounds like you have a very full day with your alerts, with your trading room going on. And we wish you the best of success there, Doug.
Awesome. Thank you very much. I have to jump back because I have the live session getting ready to start.
All right, buddy. Take care. Have a great day.
Thank you very much for having me here. And Rolly, thank you very much for all your kind help in getting me started here.
No problem whatsoever. Take care.
Take care.
All right, folks. Well, that pretty much brings to a conclusion what I think's been a very, very eventful day for us. I certainly took a lot away from this, and I just want to thank you for your interest and your attendance and coming. I also want to thank Dave Aquino and Bennett McDowell and Doug Campbell for the time that they took to not only prepare their presentation, but to share it with us today. These are busy folks. And I'm positive that each one of us will be walking away with at least a couple of new ideas that we might want to try and consider in our trading and our investing activities right away. And as I mentioned earlier, today's presentations have been recorded, and we're going to send you a link to these recordings by email sometime in the next couple of days, probably by tomorrow. And so once again, thanks once again for your support. And on behalf of Westmark Trading, I look forward to seeing you all at next month's Market Masters webinar. So take care, and I hope you enjoy the rest of your day. Bye-bye.